Hi, Warriors. Spencer, thank you. Hope you had a great Easter as well. Ping Pong, how are you? Face Warriors, everyone doing okay? Pretty quiet session with Europe being closed. Looking at the Dixie here. So Friday, it looks like we broke out of a descending triangle. I'm looking at it as a possible false breakout, but I won't have evidence until I'm, say, back under 97.30-ish. Euro so far has held the 61.8 level on this pullback after taking it out marginally on Friday. Here we are. So still has some work to do. I think that there still is a chance, unless we're just going to break down from here, and that would take it, we have to take out 1170, take out this low here. Still my contention, there's a shot for us at least to get to 1280, and over 1280, 1275, will challenge these highs. So a big week in the dollar, pretty quiet right here. EG is working marginally here. And as I've been talking about for a while, if 86.50 was a weekly breakdown, here we are again, right there. So to me, it looks like there's a chance that we, as long as we hold this 86 level on pullbacks, 85.90, that there's some more upside. So the preferred long to me looks like if you want to fade the dollar is euro, and if you want to go with the dollar, the preferred short's probably cable or Aussie. Getting a little pop in the gold, which is natural after the big decline that we had. It's going to be tough sledding, I think, up here between 1280 and 1285. This was the breakdown. You know, we get over 1280, that'll make this look like a false breakdown. We'll see what we can get out of it. Silver is a better structure. As you can see, it's been holding up much better than gold. And again, I want to reiterate my bearish stance in copper. Really not getting much of a pop after coming off this 3-drive line up here. I'd love to see rallies back towards 295 or so. If we can get another high in the S&Ps, perhaps that risk on could carry copper into a failing rally. It's my contention again that we're getting a lot of negative candles up against this line, and 281, 282 I think could be next stop if we get a failing rally here. And there is some pretty good pressure here on the S&Ps today. Just something I teach. It's not going to take much to get a 2-week reversal. By Friday, if we're closing back under 2908.70, which we're currently under, that would be defined as a 2-week reversal, which is closing under the close of 2 weeks ago. 2925 was the number that Peter Goodburn had, and we got close enough for government work last week at 2920, so we'll see what happens there. And then yen, okay, looking for shorts in yen, but not till we get up till, as long as we're holding this 1180 level. So, you know, it's good when markets make advances and take out key areas, because then you know the next time underneath it there's something wrong with the market. So I'm thinking there's one more shot up in the yen to the upper 11s, maybe 1180 or so. And if I'm right about that, then there's one more pop in yields, which would set up a third drive if that happens. There's your 10-year. So on the 1 hour, you have 1, 2, unless it's going to be a right shoulder. But if we get over 258, maybe we could get one more rally back into the mid 260s on risk on. I would say back under this level, 254, 253, then this was it. And we talked about the lows at 235 because we had a 1, a 2, a 3. Okay, so we'll see. There's a lot of support at 254. We get underneath that, we have some problems. Okay. Anyway, people don't know I'm live. Let's see here. Who hasn't done this? Hi, Russell. Who isn't using the best team on the net? Okay, so let's see, 25 minutes ago. Okay. Let's look at some of these active patterns. Blake's still holding Aussie Kiwi. Great trade. Greg is still bullish. Okay, he's looking for 114. So that's higher than what I'm looking for. Maybe we get there. But you guys have to hire our team. Don't you think? Because where are you going to find a team like this? I don't think anywhere. In one place. And you all know who they are by now, right? Let's see. Blake's pretty good. Greg is pretty good. Stelios is pretty good. Steve's pretty good. Joe's pretty good. Paulie's pretty good. Amanda's great. Andre's pretty good. So we have one great and everyone else is pretty good. I am. All right. So also, you may want to call our sponsors. In fact, if you're not getting a rebate check from your broker, improve your own bottom line. So you want to get involved either in the reimbursement program to pay for your subscription or get a check by talking to the guys at Forest Park FX, who are brokers of brokers, and we'll find the right place for you. Here's some frequently asked questions about that. And let's have a great week. I have an interesting guest. It's right up Steve Volge's alley, and Stelios' alley as well. Patrick is with Malden Economics, and I went to their website. So they're seeing some things, undercurrents, that some indicators that people don't really look at, you know, like trucking and rails, and they're showing some pretty good slowdowns in there that the market's not talking about. So, you know, that could set up another big bond rally. Either we've begun, or if yields shoot up one more time into the mid 260s, you know, bonds or TLT could be a decent buy. You know, if you don't want to trade bond futures, there is a pretty good ETF, very liquid ETF, TLT. It's like 20-year paper. So here we are. My TLT for you guys.
And there's also, morning coach, there's also
Hi.
TBT, which is the inverse, TBT.
Right. Yeah, they're both very liquid, you know.
Yes.
So,
yes.
You know, maybe TBT is a scalp if we're going to 265, but I'm thinking TLT. I know some Ellioticians are calling this a forestell, you know, where we're pulling back here and there's one more wave to the upside. And I think the yen will tie in with that as well. So, you know, if you know correlations, you want to pay attention to US dollar yen when it comes to yields. And again, as TBT could end up being a great position buy after this last rally that we have. I just saw it. After one more rally in the bonds, here's TBT. Okay, so just like bonds have pulled back, TLT has pulled back, TBT has rallied. So if we get one more bond rally, we'll probably get one more break in TBT. Looks like a 2 to me. And then this could be a great hold, long-term hold, as after this last push down in yields. You know, my buddy Jim Walsh is looking for us to retest and even take out the high of yields from last year, which I believe was 325, 330. So that could be setting up. Also, if we get one more wave up in bonds, I think part of the catalyst would be some risk off coming into the stock market as well. So any questions on anything I've covered? I know it's a slow session because of you Europeans celebrating Easter on the wrong day. We're probably all, this year I think it is on the right day because Passover was the Last Supper, and Passover was Friday night. Okay. The Jewish people use a lunar calendar, so it's always, the same time of the month based upon the moon. And maybe that's why I'm a lunatic. And wondering how Blake did on the golf course this weekend. I know he went out there and hoping you didn't have the yips, buddy, and you were draining him like Tiger.
It was a ridiculous outing as a golfer. It was probably my worst round of the year. And you know what? I'm going to blame it on the heat. It was so dang hot.
What was it? Because it wasn't that hot here this weekend. What did it get up to out there?
It was like 98 degrees.
Oh, man, that's early for this April.
Yeah, and on top of that, I was on a course that had very little shade. I mean, when you're trying to find
shade,
palm tree leaves as shade on the golf course. Now think about that. Palm trees are probably the most useless trees on the face of the planet. They really are. I don't know what the infatuation with palm trees are. We have them. They're useless. They're just tall, and they have a wingspan of leaves about like 10 feet, and then they're way up in the air. And so when you're hiding underneath these palm tree,
didn't your caddy carry an umbrella over your head? Shade you?
Yeah, right. It was. I mean, well, it. Hold on one second. I had to just
go ahead.
Back to an admin.
Anyway, welcome back to Rip Van Winkle Markets.
Yeah, it is a holiday in most of Europe, so everything's really quiet. Obviously, there's not going to be a whole lot going on today, I don't think. But you got North American traders that are in. The Stelios. I think it was Stelios last week. He's like, are we going to broadcast on Monday? I'm like, you know what, we have to, just because North American markets are going to be open. So that we might get some activity today. We might get some.
Well, we got some like Stelios was saying on Skype. What are we going to do? Just talk about crude?
Well,
all morning, because that's really the mover.
It is the mover this morning, and crude is higher, and I'll let the guys talk about it a little bit, so they have something to talk about.
Okay.
Yeah, I don't want to take everything. So instead, we'll talk about the lira. No, I'm just kidding. So as you got some crude movements. I actually picked up some dollar Canadian as a result. Now, if you watched the week ahead video, and Dale, did you get a chance to watch it this weekend?
I did my homework.
Oh, you did? Okay. Well, yeah. I was really more focused on not so much the Canadian, but I was more focused on the commodity currencies and actually what would I mean, I did talk a little bit about the Canadian, about this triangle, about the false breakdown, but more importantly, it's about stocks and where they're at. And also like the Swiss franc and what it was doing, because I'm not in the dollar Swiss, because I actually want to be long dollars at this moment. I want to be long the dollar. That and when you say, well, I want to be long the dollar, that would be short the euro, and I'm not short the euro right now, but I do want to start looking at dollar longs, especially if the stock market starts to see a little bit of selling pressure, which, I talked about the ascending wedge that you see here in the S&P, and you can see how the S&P has got, here, let me extend that out a little bit because of the weekend. You can see how we have this ascending wedge, which, in my opinion, will eventually break lower, which if it does, then that leads us with a potentially double top. So I'm going to get more excited and you can see I have the lower trend line actually has an alarm on it, and that's why you can see that little clock face right there. Okay, so I want to be notified, if the S&P rolls over, but if that happens, I think naturally I want to be long the dollar. So I'm looking at what to do with the dollar, and where to place dollar longs, and right now I'm actually starting to build a position in the dollar Canadian. Now the dollar Canadian has come off from this really key resistance at the 134 level, but I want to note that we did have a false breakdown here. So we've got support coming in at 133.50. I think this is going to be the first level support, which is the 38% retracement. So that's obviously key. I don't want to see it get below 133.20, because that's going to be the lower trend line by the time we get there. So if it continues to drop, this trend line is going to continue to drift higher. So we should be able to find support all the way down at 133.20. So what am I telling you here? Well, I'm telling you that I'm starting to buy dollar Canadian already this morning. I already picked some up, and I have the ability to buy more dollar Canadian on dips, and I'm willing to on top of that. So what I'm trying to say is I'm looking for this, but knowing we might get just this. And I know that if we go below here, I don't want to be in it anymore. So that's the way I'm playing it right now. And looking at crude, I mean, crude oil, and again, I'll let Stelios and Steve talk about the reasons why crude is higher. But crude does have this bull flag pattern, and you can see that we're continuing this breakout. I mean, crude's really strong, and I don't know if you guys are seeing it at the pump. I know I am here. It's gas is starting to get expensive, and like I said, I'm not sure what it's like where you live and where you reside around the world, but gas prices are starting to really ramp up here.
Tell me about it.
What's that, Steve?
Tell me about it. It's for 100 octane unleaded, I almost made like 1.9 euros per liter.
So there's 3 liters in a gallon?
No, more than 4 liters in a gallon.
Is it 4 liters in a gallon?
Yeah.
Wow. So you're talking it's about 4 euros per gallon?
It's
roughly?
like 8,
No, it's like 8 euros per gallon, right?
It's almost 8 euros. Yeah, it's roughly 8 euros per gallon. Yes.
So around $10 per gallon.
$10
Yeah.
per gallon?
Yeah.
Oh my gosh, that is ridiculous. That's crazy.
Yeah.
That's crazy.
The only thing is that
you know what? I'd be riding bicycles.
the only thing is that in countries like Greece, there's the tax part of of the price of a liter of petrol is like 80%, right? So the actual price of oil,
of the price is taxes, several different taxes. Yeah.
Oil could double, and we'll see a change in the gas pumps, but it's not going to be that huge of a
yeah, but it is a knife that cuts both sides. So, for example, when oil had dropped significantly, the prices were not that much lower. I mean, when the prices were at the lows, I would need 1.5 to 1.6 euros per liter, and now that they're significantly higher, I need like 1.8 to 1.9, and that's because, as Taylor said, huge part of them are taxes.
That's nuts. That's crazy. Well, I mean, we're seeing it. We're seeing it affect us here, and for us, it's been about maybe, I would say roughly for myself, maybe about a 25% rise in gas prices, and so just over the last 6 to 8 months, I would say. And that's a pretty substantial gain on a percentage basis. And so that's going to have a negative effect on the economy at some point.
I remember in 2001, I needed $12 to fill in an S2000 in New York. That's in 2001.
You needed what? I'm sorry, you needed what?
$12 to fill in an S2000, a Honda S2000 gas tank.
Wow. Well, regardless, the price jump is going to this move in crude oil is going to start having a negative effect on the economy, is what I wanted to try to point out, at least here in the U.S. And it's going to start to really, affect the consumer. And so so much of the United States would be paycheck to paycheck. That this is going to start to have a negative effect on the broad economy, which we have to watch, because I think it's going to, this is where you start seeing stocks show a little weakness, and if that's the case, where does the money go? And my opinion would be it goes back into the dollar. So let's keep in mind that the dollar is closing in right now on big resistance. I mean, we have resistance coming in at this 97.80, and everything that I read is looking for, everybody's waiting for which way the dollar is going to break, and which way the dollar breaks is going to influence the rest of the markets quite dramatically. So if we do see a breakout in the dollar index, that's in let's say a breakout higher in the dollar index, that's going to probably usher in some would be risk aversion in the market. So I think we do need to start following the dollar index kind of closely as we are building the apex of this wedge. And I do, and my money is right now on an upside breakout in the dollar index. And that means, because I am buying a little dollar Canadian right now, but I do think that the dollar index is actually going to be breaking out higher. So should I be shorting the euro here? I mean, I'm really considering it. It right now even I know we're bouncing at this moment, but for me, I am looking for maybe a little bit higher prices in the euro, and then I'm going to start looking for shorts. So, so Steve Stelios, how are you guys doing today?
Good, mate. How have you been?
Very well, thank you.
Good. So why is crude oil higher today?
Yes, well, that's actually quite a simple explanation. So far, up to now, there's been special waivers for countries that import oil from Iran by the US. So they say, you can import oil from Iran, and there's going to be no sanctions from our side, because that the US have special sanctions on Iran on various levels. And now there's been it's a rumor, I think, so far, but it's going to be announced apparently pretty soon that as of May 2nd, these special waivers will be gone. So that will clearly reduce the exports of Iranian oil, and that will reducing supply. It brings price up, etc. Now, the interesting thing is that the Kingdom of Saudi Arabia has already made a statement, and they said that if there is there's a lack of supply, let's say, which is marked in the markets, then they're going to step in and increase the production. And frankly, this is like a dream scenario for them, right? I mean, this is their main export, and they're seeing price going higher, and they can increase output as the price goes higher. This is a pretty good scenario for the Saudis and for the petroleum exporting countries as a whole. So that's
all right. And that's what's propping up crude prices today. Thanks for the explanation.
It hasn't been confirmed yet, but it's a very serious rumor. So
rumors are enough to move a market anyhow, as we all know. Now, of course, if it's if it doesn't work out like that, we might see a pullback after that. But from a technical perspective, we were anyhow in a very tight consolidation, and usually those find the way one way or another to get resolved to the direction of the prior trend. The fun part about crude, Blake, is if you remember when the Fed made the big U-turn in monetary policy expectations having to do with stopping rate hikes, etc. One of the things they mentioned several months ago was that low crude prices will also affect inflation expectations negatively. Since that point, we've had a very, very big increase. I mean, year to date, crude has increased by like 50% almost, or something like that. And something tells me that we're not going to have any new mentions about crude, because when crude's path lower was convenient to excuse stopping rate hikes, it was good to use. Now that actually crude has been going one way, which is higher, this year, something tells me they won't remember to mention it again.
Got it. And by the way, the comments just came out. Said White House says U.S., Saudi Arabia, United Arab Emirates have agreed to take timely action to assure that global demand is met as all Iranian oil is removed from the market. And you can see that that's caused a little bit of spike in the dollar Canadian right now, and so it's getting a little bit of a lift here. Just yeah. So
as you said, dollar Canadian, despite crude's strength, has been coiling, which definitely isn't a very bearish sign. I mean, given the fact that CAD has been unable to benefit from this move higher, I think that once we see a reversal lower in crude, that's probably bad news for USD CAD, and the same for USD NOK.
Well, it'll be bad for the Canadian dollar.
Yeah. Of course.
Long. It'd be bullish for the U.S. dollar Canadian. Correct.
Yes.
All right. Well, yeah, and I agree with that. Well, so I'm gonna be passing everything over to you, Steve, and Coach and Stelios, and Coach, you have an interview today, correct?
Yes. My guest is with Malden Economics, Patrick W., and they're noticing some softness in indicators a lot of people really don't pay attention to, like truck traffic and rails. It should be pretty interesting. Get some fundamental views on this stop and go economy we have here in the US.
That's a really good website to actually read from. That I read from time to time is Malden Economics.
Oh, you go there?
Yeah.
Okay.
Yeah, I haven't been in a while, but it's a good resource, and I have used it quite frequently over the years.
Cool.
So,
yeah. All right.
Guys, they're rock stars over there. So, all right, Steve. Well, I'm going to pass it over to you and pass the screen over. Now, as I do that, for those of you that have not joined ForexAnalytix, but you're thinking about it, make sure you try us out. But more importantly, use our webinar sponsor, Forest Park FX, because if you want to try to get ForexAnalytix for free through your trading, you can do that as well. So make sure that you visit our webinar sponsors. They're under the reimbursement program, and you can contact them directly. Helps us out, and obviously helps yourself out too, because this way you can potentially join our community.
I'm a happy client. I can attest to that.
Yes, there you go.
Plus, they help us bring a daily free webinar to the public.
Exactly. So,
and they help you make money from your trading activity. So nothing wrong with that, right?
Not at all. So
all win-win, man.
Yep. You guys have a great one, and happy Monday to you. And we'll look forward to a full well, tomorrow. I mean, we're still here today, but I'm just saying tomorrow should be a little bit better liquidity, I would think. All right, guys.
Good hunting, buddy.
Thank you, Blake. Have
a great one.
See you later, mate. Bye-bye.
Hello, Steve.
The baton to you, mate. I know that probably we don't have much to talk about. Since
I handed right back to you. I mean, I've really literally.
Yeah. Okay. Now you want me to fill in 30 minutes until the interview. Talking about a market that, as you said, only crude has actually moved. If you remember, I was very clear about that. I did expect a move higher in crude. The price action was very, very, very telling. We had a rectangle here, the inability of crude. I liked the initial rejection from that nice confluence of resistances at 64.50, but the inability of the pair to move lower following that was more or less what you needed to see to understand that the next move would be higher. That's why I cut, half of my short position in profit, so I can have more firepower to add higher, because I do believe that crude should not have a lot more upside left before we see a deeper correction. So I'm still holding to that opinion. As you see, not coincidentally, it stalled just as it was entering this zone. As you know, I'm not a strong believer of specific levels so much as zones, because the market is not ever that perfect. But we entered this $66 zone, and when we hit the bottom of it, we stalled. So far, this price action once again does not look bearish, so we might have stalled here. But I do think that there is more upside left. That's what we had drawn several days ago. So I do think we might go higher from here. But as I said before, be careful, because I think it's going to be a mistake chasing crude oil higher. After such a huge move that we've seen from the beginning of the year until today. So let's have a look at some correlated. Not much to say about USD CAD. Blake has already covered that. Just to say again, we're in the middle of a symmetrical triangle, which is in the middle now of an ascending channel. So, nothing really to do here. But as I said before, the fact that the pair is coiling, despite seeing this continuous crude strength, says all you need to know. And this is USD NOK from the other hand. On the 4-hour chart, it doesn't look that clean, although even on the 4-hour chart, you can see that we're trapped within a range, 840 to 880 roughly. What is important to know is that 840 is holding, and why is that important to know? Simply because 840 is a huge area of interest. Since we broke out from this multi-year consolidation correction, this zone has been holding as support every time we've retested it, and I think that as long as we're holding above 840, we really should maintain a bullish bias. Now let's have a look at the metals, of course, if you have any. How much you will pay to join you? Actually, you will pay to join us. No, I'm kidding. You can have a look at our plans. You go to our website here. If you go under pricing, these are our plans. Tier 1, tier 2, tier 3. Those actually play a role in what kind of access you have. So tier 1 is macro basic technical analysis and candlestick. With tier 2, you can choose one more from Elliott Wave and Harmonics. Tier 3 has all types of analysis. This is what we suggest anyhow, because as we've said many times, it's all about confluences. So, that's why we cover so many aspects of the market, because we believe that, when more than one types of analysis, and especially when all of them agree in one direction, then there is an increased likelihood that, something is going to move in that direction. Now, let's go to the metals, the metal complex. So, Joe spoke about copper. I had done the same here the day before. Copper still consolidating. So once again, copper getting rejected from the exact same trend line, from the exact same zone. It has proved that breaking above this $3 area is very, very tough. But on the other hand, that is not a reason to turn bearish yet, because this ascending trend line, if you want to view it as a triangle, it's a triangle trend line, has been holding. So it is still a matter of which direction this triangle is going to break. towards. So if this triangle breaks to the upside, which is a good likelihood since we've come from a move from the downside, and after breaking above a rectangle, which was a bullish development unquestionably, a continuation higher is still the main scenario. But on the other hand, you have to respect what the market gives you. So if the market decides to break to the downside, especially if we break below this rectangle once again, I do think this 287 area, I think that we might see the exact opposite happening. We might see an acceleration to the downside, which is not what I initially expected as the main scenario, but you always have to keep an open eye for any kind of development. So copper testing support currently. If you like it to the long side, from a risk reward perspective, this is the place you want to be long. Now, palladium, we were looking at this consolidation. I said that there's a decent chance it's gonna break lower, so we can have one more move to the downside towards this 1265 area. But we don't seem to be doing that. So if we have a look at it on the 4-hour chart, you're going to see that we had two scenarios here. One of them was that this triangle would break to the downside, in which case we would see one more low. The second scenario was that we would break it to the upside, which we did. So in that case, a retest of this confluence of the 38.2% fib, and actually we should redraw this here. As you see, this confluence of the 38.2 and this horizontal support resistance area at 1435, 1440, which we're almost at the moment, is going to be an interesting area of resistance if we do break above that as well. Next area of interest is 1500. So, so far a bullish development for palladium, but I'm not convinced that we're done moving to the downside because we might get rejected from higher, from this 61.8. So I wouldn't be buying it yet. I'm still actually short 1/3. This was a great trade for me. I've already booked 2/3. I still keep 1/3. And I'm going to see what I'm going to do with that. If it keeps moving higher, I don't want to let that run, in negative territory. Now, platinum. Platinum has broken above this flag after retesting this horizontal support resistance area. If you remember, we showed that on the daily chart several times, the past week. So far, platinum is behaving very nicely. It looks, quite good, quite healthy. Even if you have a look at the RSI, that also gave us a signal for a continuation higher by breaking above this descending trend line. So nice price action. Next upside targets, find them. We should probably fib extend this correction. So you can see here targets. I pay attention mostly to the 127% extension and to the 161.8% extension. Of course, as you see so far, intraday we're getting rejected from the previous high. That's quite normal if you think about it. Finding some temporary resistance in the previous high. But after this price action, do I believe that we're actually going to form some kind of a double top? No, I think that the chances are not that high to form a double top here. It's always a possibility, but not a major possibility. So I would say that once we break above it, 925 and 938 are the next areas to be looking as targets to the upside. Now, gold retesting once again this broken 1280 area of support, previously acting as support, as resistance. As long as it's holding, here, there's absolutely no chance to turn bullish. As you see, definitely underperforming platinum, also underperforming palladium, which I don't care so much about because they're not that strongly correlated with palladium anyhow. Actually, they're most of the times, actually, they're more or less inversely correlated. So it's not that I care about it, but they're usually positively correlated with platinum. So you can see underperformance there. As you see, silver also not doing much. I mean, depends on how you want to look at it. Silver on one hand, still holding above this. Let me zoom out so you can see it. Still holding above this previous rectangles resistance as support. So as long as that's the case, there's absolutely no reason why you should be overly bearish. I mean, you're not selling stuff on critical support, right? It makes no sense. If you want to do something about it, you actually buy it against support, right? I'm not saying that it's going to move higher, but I'm saying being so close to critical support, selling it makes no sense. You want to sell it, you probably wait for a breakdown from that area, a daily close, and then you sell it. So, you know, if you're bullish, this is a good sign. It's holding above it. Now, on the other hand, it is holding, but is it actually rebounding from here? No, it isn't. So I have to say for both silver and gold, I'm maintaining a bearish outlook. You know, rather cautious. I'm still holding part of my initial gold short, a small part of it. I'm in the money, so I don't really care about it. But I still think that there is no reason for me to worry, right? Because both gold and silver have been holding from the previous lows, but you know they're not actually showing any intention to accelerate higher. Now, if that happens, then we can reassess. Until that happens, this looks to me more like a consolidation before continuing lower than anything else. Let me see if we have any questions. No questions. Why would you have any questions? Nothing has really been moving. Okay. One of the things that have been moving actually is DAX. DAX is still, you know, on the up and up. You know, overthrowing this ascending wedge. I'm still long from the breakout of this channel, so you know I don't have any real complaints here. If you have a look at it on the daily chart, you will see that. Where is it? There it is. There is the overthrow I was talking about, and you'll see that we're approaching actually the 61.8 from this whole move lower, which comes at 12,333. So, you know, obviously having seen this bullish move being in overbought territory now, even on the daily RSI, having seen this overthrow from this channel or wedge, depends on how you want to draw it, approaching the 61.8, you know, combining all that, you shouldn't be looking to buy DAX up here. Now, if you're holding a long position, that's a different story. But, you know, for buying it, there is absolutely, you know, no reasoning to do so. I mean, there is no risk reward for you to do so now. So if you're looking actually to buy it, then let's go back to the 4-hour chart. Then you would probably want to see like a corrective move back towards 11,800 to do so. Now, having to do with the FTSE has also broken above this little flag that you see here, but notice how much it's underperforming in comparison to DAX. So, you know, still maintains a bullish outlook having to do with, you know, from a technical perspective, but momentum is severely lacking. Also some RSI divergence here. Keep in mind that a little bit higher, we also find some horizontal resistance zone. We also find this trend line resistance from this ascending wedge. So same deal here. I mean, if you're not already long and in the money, the FTSE, you know, there's no risk reward to buy it here. Okay, you would want to see some kind of a deeper correction. Now, if we want to speak about the US indices, you know, they've pulled back. I mean, the S&P got rejected from this nice ascending wedge that we're monitoring, but, you know, has it started breaking down in any way? No, it hasn't, because as you see, we haven't even broken below, you know, a single horizontal support area. So, you know, for me, for something to start happening here, I would want to see a breakdown below this wedges support, and more specifically, this 2870 horizontal support area. Only then I will start being more optimistic that something is happening to the downside. Nasdaq intraday broke to all-time highs what was it, a couple of days, or a couple of trading days before we double tested this resistance. So there is even a chance of a little double top, and I'm saying little double top because the range of this double top is from 76.47 to, let's say, it's like 60 handles. So, even if we confirm such a double top, it's going to point to a little move lower, which is still not going to be enough to break below this. You want to see it as a channel, fine, it's a channel. You want to see it as a wedge by using this intermittent trend line as resistance. No matter how you want to see it, the ascending trend line support is, quite easy to recognize here on the chart. So unless we break below this, and more specifically, I would want to see this horizontal support resistance area at 7,500 break to the downside. There is no real development here as well. Now, on the other hand, the Russell, the AWM, is definitely the weakest of all. I expected, after seeing this textbook bull flag, I expected a quite clean break to the upside. I expected the index to actually at least retest this 78.6% retracement from the last move lower. It hasn't done so. It actually got rejected from this previous horizontal support resistance area. So IWM definitely underperforming for the time being. As you see, we're getting some rebound once again from this trend line in the VIX. We had a spike at the end of last week for the VIX that actually made it at the at 11.1. The first time we had seen such a level since September, actually. So, like half a year ago, right? But, the VIX, despite this slow drift lower, it keeps on many, many occasions diverging with price action. So I would definitely not be buying indices up here. But on the other hand, does this mean you should sell them? Not yet, because as I said, we haven't seen yet any real technical break that would excuse such an action. Thoughts on Aussie yen and Euro yen? Absolutely. Let's have a look at both of them. So this is the Aussie yen. This is what I drew last week, that we could have seen a pullback in the Aussie yen towards this horizontal area before seeing a move higher. We did see a rejection from there. Now, it remains to be seen if this 79.60 area is going to actually act as support, because you can interpret this as an ascending channel. You can also interpret this as a triangle if you take as trend line resistance this red intermittent one, in which case you would want to see a retest of this trend line acting as support, and then seeing an acceleration higher towards perhaps 82. So I wouldn't be turning bearish the Aussie yen as long as we remain above this 79.50, 79.60 zone. I can tell you that much. Okay. Now, if we break below that, then from a technical perspective, the situation gets quite a lot more complex, points to more consolidation, which definitely isn't a good thing. We've had, due to the very, very low volatility conditions that we've had recently, we've had many tickers, many markets, not only FX, in ranges, coiling and consolidations. And, it's something we've said multiple times in the past. It's not by accident that we're saying time and time again that you should be very, very careful with, how you trade, how much you trade, position size, etc. when the markets are quiet and there is no volatility. One of the reasons I've been saying that, and, more or less anybody that's in the market that knows a little bit will tell you, the main reason is because when you don't have volatility, when you don't have volume in the markets, you usually don't get clean technical patterns to trade, which means that any signal that you get is much weaker than in any other case. Just take, for example, this move in the Kiwi yen. We had a breakdown from this nice wedge, which under normal circumstances it would produce some continuation. Instead of that, we got another consolidation within a triangle. And then what did we do? We broke above it, then we broke below it. So as you see, when there is no volume and volatility, usually technical formations do not play out as nicely as they do when we do have volatility in the markets. Then you can trust them a lot more. Irrespective of that, the Kiwi yen is testing again and again this horizontal support area, breaking below it should be a bearish development, with the next target being down at 74, this previous low, also the 38.2 from this move higher. Now, obviously, even if that happens, I'm not at all enthusiastic about this move lower. I mean, it lacks momentum, so I have no reason to really trust it. I was short. I got stopped out. A little bit in the money because I had trailed my stop loss after seeing that, this market is actually, this market actually doesn't want to move to the downside. So it is what it is. Now, having to do with your question with Euro Yen, this is what I see in Euro Yen. So Euro Yen, as you see, another situation of some technicals that are not that clean. Okay, so Euro Yen. Here it is. Okay, so Euro Yen was appreciating after finding a low, after spiking lower. It was appreciating within a channel. Then it formed another channel which was descending. Then again an ascending channel which we're still holding. As you see, we also respected this previous descending channel, channel resistance and support. So as long as these two are holding, there is always the chance that we're going to see a continuation higher, although the momentum is really not bullish. It's like more of a momentum you expect to see in a corrective move, not in an impulsive move. Regardless, as long as we hold above this area, we might move towards 127 again. Now, if we do break below this, I think that we should find ourselves back at 125. So if we do break this 125.70, and this proves to be a little bear flag, which is a good case, that's what's happening, judging from the previous move, then you should expect at least a move towards 125 before seeing some kind of a rebound. But once again, if you zoom out, you can see that there is no real trend here at the moment. And unfortunately, that's the situation with the vast majority of the markets, as I said, at the moment. There is no real trend anywhere at the moment. I mean, the only trends that you can find is like the vast majority of the indices, which are bullish. Still, they're appreciating with very, very, very slow momentum. And being as overbought as they are, they don't really let you even consider buying them because there is no risk reward. Other than that, there is no real trend in the vast majority of the markets. Okay. Now, another pair I wanted to show actually is pound yen. Here it is. Pound yen. Let me show it to you on the daily as well. Pound yen is actually within a rectangle, another market that is trapped in a consolidation. Okay, so look at this. Trapped below between 148.50, which is resistance, and 143.80, 143.90. So as you see, another market that is actually coiling within a rectangle. The only thing that tells us is that once we get some movement, if we break below 143.80 or above 148.50, we should see some continuation. Until that happens, there's nothing really to do here. But it is one market that you might want to have in your scope, because obviously it can't keep trading within this rectangle forever. So once it breaks out, we should see some continuation. Keep in mind, we've already broken above this descending channel. So, just because of that reason, I would favor a little bit a continuation to the upside instead of a break down. But that's a slight bias. It's not that it would force me to do anything one way or another. I'm just saying. On the other hand, despite having been here and testing this area for like, what is it, the third trading day now? Yeah, it is the third trading day now. Cable is now testing this confluence of supports at like 132.80, 133, still unable to continue to the downside. keep in mind if we do break below this area with some momentum, I think it's going to be a nice development, and we should find ourselves down at 128 rather fast. Speaking of which, since we're talking about dollar pairs now, let me just say that the dollar index seems like it's consolidating below 97.70 once again, but this little price action that we see looks corrective to me. So once again, it looks like it wants to break to the upside. Okay, so 97.70 seems very likely it's going to be retested, and probably when it gets retested, it's not going to hold, in which case I would expect a continuation to the upside, and probably that's going to be a development that is going to finally push at least the Forex market, and probably when the dollar moves, everything starts moving, not only Forex, probably the rest of the markets to produce some kind of volatility once again, because we've had some of the quietest markets in FX we've had in many years, and that's something to notice. So don't push yourselves in doing things under such market conditions, but on the other hand, that doesn't mean that you should stop looking at the markets, because at some point volatility is going to return, and it shouldn't take more than a few weeks. And when that happens, it might come back with a vengeance, because sometimes after very, very quiet conditions, you get the exact opposite. So
you've been saying that for a few weeks now, man.
I know. There is no way to, as you know, Coach.
Can't we predict when volatility is going to strike?
Yeah.
Can we?
No, we can't. We can't predict when and how that's going to happen. I mean, what is going to be the catalyst? But we know one thing for sure, is that we get periods of high volatility, which they don't last forever, and then we get periods of very low volatility, which also don't last forever. And
they seem to last longer, don't they?
Oh yeah. It's due to central bank manipulation.
But bastards.
Yeah, it's due to central bank manipulation. But as you know very well, at some point, that's going to be it.
The genie will pop out of the bottle, and they can't do anything about it.
Exactly. And when this genie pops out of the bottle, yeah, exactly, it's going to be very, very, very hard to contain.
They'll try.
They will. But you know how it is. You can be successful for a period of time. You can be very successful for a period of time. But when things get out of hand, right?
Yeah. Like North Korea's leader Kim is moving nuclear material again. So that piece, you could tell how much progress we've made with North Korea.
To be very honest, I wouldn't worry that much about North Korea. I think
what should I worry about? Because you know what, I'm a big believer in this saying.
No, I'm saying
don't tell me worrying doesn't work, because almost everything I worry about doesn't happen.
Has happened. Okay. Yeah, okay.
So it works, bro. Anyway.
Yeah, if the relationship works like this, yeah, absolutely. Yeah. So, Coach, if your guest is here, be my guest and start your interview 2 minutes earlier, since there is not much to talk about.
Okay. All right. Well, I think I know how much you studied economics in school, Steve, and Patrick Watson's right up your alley, because that's what they do there. Good morning, Patrick. I'm going to make you the presenter now, and looking forward to our conversation. Welcome to FACE. I'm not sure if you want to share a screen. If not, I could show your website. So
yeah, that's better. I don't have anything to show.
Okay, well then let me do that, and so people could take a look at it. And while we're speaking about low blood pressure, and according to the recent writings that we've had, and I should probably pull up yields, since that measures, at least attempts to measure, economic activity, along with all the other false central planning things that go into the bond market. So to you in your recent writings, the economy is taking too much lisinopril. Is that correct? Because I take that for high blood pressure.
Taking too much lisinopril would make your blood pressure drop
Right.
too low, I guess. I'm
Right.
not a doctor, but it seems like that's how it would work. But yes, so in the very big picture, we are late in the economic cycle, so we would expect to see some weakening at this point. We have seen some efforts to stimulate the economy with tax cuts and most recently the Fed slowing down its rate cuts and ending its quantitative tightening. However, we also have other things going on, one of which is a trade war or attempts to start one. And so looking back over the last year or so, what happened was it was early 2018 when Trump began rattling cages. He put tariffs on washing machines and solar cells, and then that progressed to steel and later other things. And business managers and owners are not ignorant of these things. They see what's happening. They see that it's going to become harder and more expensive to import the things they need, both components to build stuff and
so they they did a lot of front running with their ordering. Is that the point you're getting to here, Patrick?
Right. So people accelerated their orders, and what that created was a bubble in shipping of all kinds of goods. So we had ports clogged, we had trucks on the highways, all this activity. But this was not new demand. See, this was 2019 demand being shifted forward into 2018, and that caused this giant boom in transport and imports, and that is now reversing. So the warehouses are full. Businesses have inventories very high. We're seeing lots of anecdotal data that businesses are now wanting to reduce inventory, and that means we're going to see less of this shipping activity. We're going to see more price discounting. We're going to see less need for truck drivers and warehouse workers and all these other sort of things that boomed last year. So that doesn't mean recession is imminent, but it's a pretty bad sign.
Okay, so I know it's your mission at Malden to explain these economic conditions and keep your finger on the pulse of what's going on, Patrick. Is there anything that you guys do, or your subscribers or clients that want to know what they should be doing, positioning their money in the markets conservatively during this time frame? Because it sounds like at the minimum, you guys are looking for at least a slow patch, and kind of an unusual time of the year for it to happen, isn't it? In the summer, usually things are humming, and maybe things slow down again, after Christmas. So is this an unusual seasonal period for a slowdown?
Well, we're approaching the time when a lot of retail businesses have to start putting in their orders for the holiday periods. And then
that early, yeah.
Right, and then the Asian factories start producing all the things that are going to be imported, and it finds its way over here, and inventories start building toward the end of the year. But right now, the inventory is already there.
Right.
So, and if you did import more stuff, where would you put it? So that's a problem. But
let me ask you this: with, I've read reports that even though the president hasn't shut down the border with Mexico, that there are all kinds of log jams of goods and services trying to get, and miles of lines of trucks that normally used to flow through easily that aren't anymore. I'm not sure what the reason is, but is that having any impact on the economy? And if the border is shut, what kind of impact would that have on economic growth here in the U.S., and would we be paying more for a lot of things that we're not right now?
Yes, and yes. It is having an impact, not catastrophically so yet, but what's happened is they've diverted some of the personnel to away from the checkpoints where trucks come in to dealing with refugees and migrants and so on. So that's caused some slowdowns. But yes, if he were to follow through on completely shutting the border, that would be catastrophic, because you've got the California agriculture economy depends on migrant workers who come across that border legally. You also have factories all over the Midwest who depend on parts that come across that border regularly, and they don't keep very much on hand. So within weeks, you would have factories in Michigan, Wisconsin closing and laying off people. It would happen very fast.
Okay, so therefore, it's only rhetoric, and it would really be kind of shooting himself in the foot if the president did that, being a year and a half away from presidential elections, don't you think?
Well, he's hard to predict, but yeah.
Maybe Melania can predict him. How about the fact that, I have some bearish views on, some of the things that are about the economy, like copper, which makes me think about not the U.S., but China. Do you guys do any coverage of global economic conditions and what could be possibly affecting what's happening here in the U.S.?
Yes. So China had been slowing down. It was in December. Their credit growth took a big dive. That is reversing itself. So in our view, things are looking up in China a bit, at least in the near term. Now, they have some very significant structural problems that are eventually going to bite them. But that does affect the U.S. because that affects the way China responds to all these trade negotiations that are ongoing. They believe. So
it gives them a stronger hand because they're recovering. Because, yes, the big point going into it was, their markets were under severe pressure. The, Shanghai FXI was making new lows while our markets were still pretty buoyant. You think that condition is reversing?
Yes, they're in fine shape, and time is not on the U.S. side here. See, what people are forgetting is this is not a real trade agreement that anyone is talking about. Real trade agreements have to pass through Congress. Everything Trump, and then there's no chance of that. What Trump is doing is executive actions. So right. Anything, even if he makes
what he criticized Obama about doing too much of.
Right. So even if he makes a deal, a new president in January 2021 could end all of it. And okay. So China can rightly figure we can write out anything for another less than 2 years. So there's time is on their side.
Okay. Does that make you think that they won't hand at least a symbolic victory to the U.S.?
If there's some kind of agreement, it will be mostly symbolic and superficial. Okay. They may agree to buy some more soybeans or something.
Okay.
I don't see it. They're not going, in my view, they're not going to solve the structural issues around intellectual property and
right.
business interference and those things.
Okay. Does the value of the dollar come into play in your analysis at Malden?
Yes. Well, in my personal analysis is I'm bullish on the dollar.
Okay.
And the reason for that is I see exports falling. Sorry.
Okay.
And that's going to result in fewer dollars in circulation overseas, which is going to drive the price of the dollar higher.
Okay. Anything you can see, because that's going to be looked at as deflationary and a problem, is the only way, and I'm looking for sharp, before it's over, I see the Dixie over par, is the only way we could reverse the flows in the dollar and shift trend for the Fed to launch another QE mission?
Well, I don't know if it will have that effect, but I think that's probably what they will do.
Okay. Do you think with what you're describing in the economy that it's going to happen by the end of the year? When do you think we'll start getting numbers that the rest of the market will recognize as economic weakness, that you guys are ahead of the curve and it's really not the narrative right now, is it? The narrative is the U.S. economy is humming along, correct?
Yes, I think we'll see more, just kind of a gradual weakening the rest of this year, and chance of recession rising considerably in 2020.
Okay.
Beyond that, I really think we are headed toward a Japan-like scenario.
Interesting.
Go into long deflation.
Okay, so do you think that treasuries or any other type of interest-bearing instruments are going to be the place to be? Do you like the 30-year bond at these levels? Or is it even possible that what you're talking about could eventually drive rates up, not because of a humming economy, but just because of lack of demand for our paper?
All right. Well, I am generally, and I should say I am not a trader. I don't know what's going to happen tomorrow or next week. You have
Right.
lots of experts.
Who does?
Than me at that.
You're not Nostra Wilson?
No, afraid not.
Okay.
However, I do see long-term interest rates going lower rather than higher.
Okay. All right. And we've had a pretty good, one of the partners here at ForexAnalytix, we've had a real nice recovery in not just the market, but in the energy market and crude oil from low 40s to mid 60s right now, taking Iranian oil off the market. To me and to Blake, it sounded like, that's not going to help the consumer. I have friends that already are complaining about high gas prices, and they just had to, put a 100 in to fill their tank. Could that also be part of the slowdown scenario you're talking about?
Well, it's not going to help.
Yeah.
And I'm puzzled here at what they're thinking. If you're the Trump administration and you don't want a recession, then policies that raise oil prices are not the way to do that.
Right. Well, they think they could manipulate everything, and that the Saudis and other producers will make up for that Iranian oil output. I guess we're going to find out.
That may be what they're thinking. I don't know if that can happen.
Okay. And any view on gold as a store of value in these times? Personally, I know that there's company opinions and you have your own. Do you have a view on it at all, Patrick?
Long-term bullish, and I say that because, like I said, I think we're headed toward a worldwide Japanification scenario, and Japan has survived as well as it has because it's been able to depreciate its currency.
Okay.
But it's not, just math says it's not possible for everyone to simultaneously depreciate their currency. Something has to rise in opposition to that. So,
right.
What that would be could be Bitcoin, could be gold. I don't know. Some other assets are going to have to start attracting the capital that's going to leave fiat currencies.
Okay. So, I really appreciate you coming here after the holiday. Any thoughts that you want to wrap it with? I mean, we know that any agreement, according to your view on trade with China, is going to be strictly symbolic. Do you think that after a symbolic agreement, there's already talk about turning towards our allies in Europe and having some type of tariff action on automobiles? You think that could happen?
One way or another, the trade tension, whether you call it trade war or not, it's going to continue in some fashion. If we reach some agreement with China, then Trump is going to pivot to auto tariffs on Europe, or and this new NAFTA thing. USMCA, they call it, that's nowhere near passing. It has to pass the legislatures of all three countries, which is not imminent.
So we're operating, North American continents are operating really without a trade agreement. They're just operating without one right now, correct?
Well, no, the old NAFTA is still there. All those rules
Oh,
are still
okay.
there.
Okay.
That hasn't changed. Trump has talked about pulling out of it, and it's legally unclear whether he can, but he might try, which would be chaotic. But yeah, trade tension is going to continue in some fashion.
Okay, so really, being a little bit of a student of history, I know Smoot-Hawley was legislation, but is there really any difference between it being legislated and being done by executive action? Won't it have the same type of outcome, and it wasn't so great in the 30s?
Well, it's somewhat better because, as I said, if Congress hasn't legalized it in statute, then it could.
They can reverse it.
The president's term does.
Okay. So we could weather another year and a half of this type of stuff.
Right.
Maybe.
Or Trump could be reelected and it could go on 4 more years. No one knows. So there's less certainty than there is for Congress to be in on this.
Okay. So why don't you tell us a little bit about Malden and what you provide for subscribers? Are you mainly institutional, or do you have retail people coming to you? Blake Morrow comes here to read your stuff as a resource. What's your business model here at Malden Economics?
Well, we publish a lot of economic analysis, and what we try to do is explain things in ways that people who aren't specialists, aren't professional economists or traders can understand. And our founder John Malden is very good at that. And I try to help a little bit, and our subscribers and readers tend to be financial advisors, high net worth investors.
Okay.
And we have several subscription services. We have a lot of content that's free, so people can go to maldeneconomics.com and they'll see that from me and other people.
Okay, Patrick, can we just, I just noticed this, and it's been in the news with President Trump's 2 nominees for the Fed. What does Malden, what's his first name, John?
John.
Yeah, what's John saying about that Trump may regret his Fed takeover by nominating Steve Moore and the guy who said, I think, number 9 or something like that. Godfather Pizza guy. Why will he regret it?
Well, that was an article I wrote a week ago.
Oh, okay.
And my point there was that there's not a lot of good outcomes here for Trump, because he either succeeds in getting the Fed to do what he wants, in which case it is no longer independent, or he fails, in which case he looks weak. So, because he can't even make the people he appointed do what he wants, right?
Yeah.
But the reason I said it could backfire is the most recent example we have of this was Nixon getting Arthur Burns to cut rates before the 72 election. And then we went into recession, their stocks crashed, then that all led up to Paul Volcker having to clamp rates down to stop inflation.
Yeah, the liquidator.
Yeah, which was horrible, and neither Ford nor Carter was reelected because of all this. So it did not work out the way Nixon thought it would.
A lot of things didn't work out the way he wanted them to.
Right, and
anyway. I really recommend guys, to go here and read the stuff that John and Patrick, and you have other contributing editors as well, Patrick. The content is edifying is the word I would use, and open your eyes to things that, you normally don't read about on Twitter or read about here on the, CNBC or Bloomberg. So, Patrick, I really appreciate the way you guys dig in under the surface for things that most people don't notice, and most people are ostriches with their head in the sand. So thanks for your mission of trying to alert people to not be blindsided with what may be ahead around the curve.
Yeah, well, that's what we try to do. So good to hear that. We see it as our pleasure.
Okay, buddy. The video will be out in a couple of hours, and I hope that on this winding road in the economy that you guide everyone well so they get to their destination. And thank you, my trading warrior brother. I know you don't say you're a trader, but like it or not, you're my trading warrior brother, Patrick, and appreciate having our conversation today.
Wonderful. Our pleasure. Have a great day.
You too, Patrick. Okay, everyone. So Europe will be back. We'll all be back in full force. And remember, don't just count your pips, count your blessings. And see everyone tomorrow. Adios. Thanks again, Patrick. You're welcome, Eric.